In the main markets, in the past trading session, the flight to safety in the bond market continued, driving down yields. Also, there was a flight to safety into gold and also into Bitcoin, but not into the US dollar. We can see recessionary footprints already emerging inside markets with the sell down in oil. We note actually that there's a bit of positive news. Risk appetite is still reasonably healthy. Junk bonds and high yield corporate bonds have not lost their support levels, but we did get a bit of a spike in the VIX, which impacted major indexes. Keeping your eye on the VIX is very, very important, as we saw around February 2020 when the VIX shoots up, the major markets, all of them, shoot down. The VIX currently is over resistance, and it's in a month where the VIX typically spikes. March is a very spiky month for the VIX. What does this actually mean? If the VIX spikes up, we would expect the SP 500 to spike down, and also crypto to follow it. We recently spoke about the move, and I have inverted it here to give you a clearer signal. You can see that the move, when it moves down, the inverted move, it heralds a market meltdown, and we're seeing some very, very nasty stuff in the move. And the move measures bond market option volatility and price liquidity. The major markets were hit yesterday. The VIX increased, gold and Bitcoin up also. But the other major indices were down. There is banking contagion in the main markets, and that is playing out globally. SVB Financial files for Chapter 11 bankruptcy protection. The markets are getting very, very choppy out there. The headline from Bloomberg, wait 10 seconds, lose $1 million in markets rocked by volatility. Big bond moves in a flash can make or break a year for traders. We apply Rule 621, buy on red, sell on green. We're all about making volatility our best friend, which is Rule 130 from the Masterclass. There is a lot of volatility out there. We can see that there's now a 59% probability of a 25 basis point increase in the federal funds rate. A lot of people thought that the Fed would pivot. It wouldn't increase the federal funds rate. We can see that's not on the table at the current time. We also saw the consumer sentiment is down. It's lower than anticipated. The markets are getting really choppy. I'm going to break down exactly what's happening here. What we saw in yesterday's trading, the S&P 500 did a massive spike up and got through all of this smart money sell area. We were thinking that is the potential for the markets to retrace and retest this resistance before they potentially move down. Of course, we have three-dimensional decision making, because we actually anticipate if price moves against us, and that's actually what happened with the S&P 500, and you can see how that weighed on the various economic sectors. We've continued to see the crypto market shine. We know Rule 225, Bitcoin cannot escape the stock market's gravity. And we also have a specific process and methodology, a strategy and a system for looking at all financial markets. When we saw yesterday that the S&P 500 was coming up as Bitcoin was just meandering along, there was a potential for a big rally in Bitcoin. I've also been mentioning for the past couple of days, the markets will do whatever they want to do. They are basically irrational. But if you stack probabilities, you can see signals. You just have to have the power to go through and do the buying and selling when you get those signals. Let's have a look and see what played out with Bitcoin. What we saw with Bitcoin, we knew this particular gravity with the S&P 500 came out. So we anticipated that to play out in markets. And it took a little while for it to actually play out, but it did. What do we actually notice here? This first money, smart money sell level actually acted as resistance to a ping If you didn't have these SLs, these Stanfield zones on, you wouldn't know where the inherent market structure was. What about the next level? It came up to between 26,621 and 26,697. It tested it, got below it, tested it, retested it, and now it's slightly above. What do we notice with the SP 500? We notice it's starting to go down. Is this the time when we go all in and more to crypto? Please let me know what you feel in the comments. We've seen a very good correlation between the SP 500 and Bitcoin. It doesn't exactly play out ping for ping, and this can confuse a lot of people. It's an on average relationship. There's a lot of money that can be made in the markets. What I wanted to show you was a trade I did yesterday. I bought $10,000 worth at 24798 right down here, and I sold it at that Stanfield zone level right up here. And the difference was about $752. If we pop that into the calculator, this buy level here and this sell level here, we can see that's about a 7.5% return. And when we look on an annualized basis, it's quite nice. It's a little bit better than bank interest. The thing to note, this trade was made when the markets were just throwing such negative signals, but we actually are very, very adroit. We're very flexible. We look at the markets and say, okay, market, what are you trying to tell me? The market yesterday was trying to say, I want to do a retest. If you want to make trades like this, you just simply use the knowledge from the masterclass, and inside the masterclass is the CTKS method, or you can just go directly to the CTKS method to pick your targets, to know where the market is going to slow down and potentially reverse. Understanding objective dynamic market structure is incredibly important. Later in the day, we uncovered the culprit. The Fed balance sheet is rocking and rolling. You can see it right here, this purple line. The Fed balance sheet was getting bled out, but now because of the banking crisis, the Fed is needing to shore up the financial system, and that created a risk-on behavior. You don't have to use big amounts of money. It's important to start small and scale. If you had $100 and you were to put it into a bank account for a period of 12 months, look at this. You could get $2 or even $4 or $2 or $4 or $4. Wow, just magnificent. But you would have to wait 12 months. Let me show you a slightly different perspective. Say we had that $100 and we were after a target rate of return of 3%. You can do it in a variety of ways. You can take the same $100 and just turn it over, get 3%, turn it over, get 3%, turn it over, get 3%. Or you could put $1,000, in this case $900, and just see that you can get 3% each time you're in the market. You can see that it adds up to a reasonable return. Remember what we were looking at 12 months, $4. Well, this is a little bit better than that. But what about if you had more than $100? What if you had $500? It's the same 3% and it will just accumulate to more. The more you invest, the more you get back in absolute terms, but the percentage stays the same. So what if we went a bit crazy and made it $1,000 a level? It's still 3%, but the absolute return is more. What about if we even went bigger than that, say $10,000? Why I'm actually showing you this is there's a lot of YouTubers out there and they say I made $75,000 in 10 minutes. Can you imagine what they're actually risking? That's financial suicide in the making. A lot of people say, ooh, I can make that. But look at how much you actually have to put out to make a percentage return. Be very, very careful of leverage. It can decimate you. This trading is all yesterday, where I put $1,000 per level in and just sought a little over 3%. I always am very, very transparent. This is my trading history. Now, what did it all add up to? I put 9 levels of $1,000 in, and I received 9322 back, so $322, which is about 3.5, well, make it 3.6%. If you look at the annualized return on investment, it's quite healthy. What is the annualized return on investment for bank interest at 12 months? I'll show you. It's actually that. It's what you get back. But of course, you understand that banks love to give you fees. After your $4 fee and your $4 interest, you may not be as better off as you think you might be. The key to understand is that you can get in and out of trades, buying and selling, buying and selling, buying and selling. That's what I did. This is just cycle trading from the masterclass. You can see that it can really pay off, and you could actually reuse your funds. You don't have to put a new level in. These are new levels. These are 9 $1,000 levels. But I don't want to make you feel any pressure that you have to go up. You can use $100 levels, $50 levels. What you're trying to do is to get into synchronization, and when you feel synchronized, you go for it. But you must have the knowledge, and you must have the psychology as well. Our psychology is rule 252. We are prepared and not scared. Just think about it like this. If I was scared about the VIX, if I was scared about the move, if I was scared about the banking disruption that is occurring globally, would I have gone into the market? No way. I would have been scared. But instead, we are prepared as a global family. We are typically in when other people are out, and we're out when other people are in. We always have our three-dimensional thinking. We always think, what if the market turns against us? And we think that first, not last. What if it goes neutral? It just doesn't go anywhere. We think about that too. We have a strategy. And what if we think about it going up? Of course, we go long at spot. We don't use any derivatives, and we don't short. The crypto market is far, far too volatile. But that volatility, when enhanced through knowledge and attitude, can really, really work for you. You can see just those 2 trades yesterday were quite a nice return. And you can do it too. The masterclass is all about 3 decades plus of knowledge transfer. We know that no alt can escape Bitcoin's gravity. So when we saw the SP 500 sparking up, we saw a delayed reaction in Bitcoin. But we were anticipating that. We are prepared and not scared. When we look at XRP did a bit of a jump, and that's fantastic. I also spoke about ADA yesterday. ADA did quite well. And I've got quite a few different trades on ADA as well. I've got trades all over the place. My trades actually don't matter. Your trades are the things that matter. When you get into any specific trade, make sure you have the first piece of knowledge, Bitcoin's gravity. Look at what Ethereum did with Bitcoin's gravity. It's following it. What about BNB? We noticed BNB pointed a bit of a flag to a recovery in crypto. BNB surged, and I pointed out yesterday, the world's largest exchange, BNB is used to avoid a lot of fees. That was a big tick. You'll need a lot of courage when you trade, but you know all traders are investors, and all investors are traders, because they're just people who buy and sell. A lot of investors think that they're making money off the back of other people. Not true. Just think about this. Think about if you're buying when other people are selling here, you're actually helping them to lock in profits. And when you sell, the same thing. You're helping somebody to get into the market. Don't look at the markets negatively. The fund managers, the big money managers want you to do that because they want you to invest. When you look at any particular crypto, make sure that you know where your smart money buy and sell levels are. you can see that ADA has a lot of underpinning support from 281 to 307. It's currently 344. That is 0.344, but 344 is easier to say. What we actually saw in terms of market structure, ADA was very close to its smart money buy area, had a lot of positive air in here, which meant the buyers were supporting price up. When we think about the Fed injection of liquidity and also the SP 500 spiking up to do a retest, that gravitational pull of the main markets pull Bitcoin up. And we know no alt can escape Bitcoin's gravity, so we expected the alts to come up with it. I've just put the weekend indicator on. Through the CTKS method, you know where the smart money is likely to come in and sell, and also where the smart money is likely to come in and buy. We saw that playing out to a ping inside Bitcoin, and we know that Bitcoin must be referenced when you look at any particular alt. With the market so green, the longs are being pulled out, and they're doing a good job of liquidating the shorts, because this is what all of this price action means. The shorts are getting technically hammered. But remember, side swap all the time. These longs and shorts take it in turns to get liquidated. Over the past 24 hours, there's been 203.54 million in liquidations across 53,658 positions. And when we look at the total liquidations in the past 24 hours, we see 72% short. The past 12 hours, about 58% short. The past 4 hours, 83% short. And the past hour, about 81% short. You can see that the shorts have been driving the upward price momentum, and they've really been driving it. A lot of people got caught on that wrong side, because if you're not monitoring and paying attention to what actual price action is doing, you can easily get caught off guard and desynchronized. The best way to avoid getting liquidated is to actually buy at spot, and that's what we do as a global family. When you buy at spot, you're just taking the money that you have and transferring it into a crypto. You therefore own that crypto. When you're doing a derivative or some form of leverage trading, somebody else owns the crypto. You don't, and you pay them fees. And they can call on it because they've loaned you the money. You're paying. We can see over the past 24 hours, Bitcoin has done incredibly well. It's heralded the start, and we've seen this before. Bitcoin is a flight to safety inside the crypto market. Over the past 24 hours, the greatest gainers: Stacks, Immutable X, Conflux, Phantom, Neo, Wu, XDC, and LRC. The greatest losers, top 100, are just about nothing. Maker down 1.46%, and everything else green, including all those stable coins. The market is overheating. Just be a little bit careful out there. Has the banking crisis been resolved? Is the VIX just going to plummet from here? It's unlikely. On both accounts. Is the inverse move, saying everything is fine, everything has been fixed? No, it's not. Caution is required here. We're still getting a big move into the bond market. From a very simplistic perspective, you could think that there are just a couple of buckets where investors can put their money. Bonds is one, the stock market is another, crypto is another, and of course there are more buckets than that. But the concept is the bond market and the equities market, the stock market, they're very, very big buckets. When you get a lot of people putting money into one particular bucket, they're taking it out of a different bucket. The flight to bonds means that the money is being withdrawn. Smart money is leaving the market. They're doing it for very specific reasons. They know there are storm clouds on the horizon. What we've seen basically here, this in many respects is negative air underneath this particular once support line when the S&P 500 broke out. turned to resistance, a double, triple violation. And now we can see that negative air there. This area between 38.78 and 39.39 is likely to get retested. We would have expected, especially with the Fed coming in, a big spike up to 40.65. We didn't see that. Why is that? Because the money is still flowing into the bond market. A lot of people are looking at the crypto market with glazed eyes. Wow, this is fantastic. Let's go all in and more. Don't forget the overarching background of what is happening. There is not risk on in the market at the moment. Taking advantage of these green days is what we do. Your superpower is Rule 621. Buy on red, sell on green. Having this particular rule is a game changer. And you can see this is an NFT on OpenSea. What a lot of people find, that they can know the technical knowledge, but the mindset is the thing that stops them getting in and out of the market. Having your positive excellence in play is very, very important before you buy or sell. The key is to master emotional control, which is Rule 734 from the Masterclass. Someone you know found that the Masterclass changed his life totally, and he wants to pay that forward by helping someone else through a CTKS partial Masterclass scholarship. If you are interested in the partial Masterclass scholarship, please use the link in the description below. The Masterclass is a premium Rolls-Royce level Masterclass on crypto technical analysis using the CTKS method. You can only learn about the CTKS method inside the CryptoTradingKS Masterclass or the ctksmethod.org. This is 30 plus years of knowledge transfer. The Masterclass is very, very well regarded, and it came into life for a very special reason. If you go to the testimonials section on cryptotechnicalanalysis.org, the link is in the description, you will find so many beautiful people have just reached out and shared how they feel about the Masterclass. It's very, very nice. I've never asked for one recommendation or one testimonial. Thank you so much, everyone. As a global family, we're focused on positive excellence. Positive excellence gets our mindset correct to experience all the beautiful things that life has to offer, such as fulfillment, meaning, happiness, and success. We've been talking a lot about patience in the comments. I'd like to talk today about learning. Learning is vitally important. For example, if you place a trade or you don't place a trade, there's learning involved in both situations. Where you put your entries, where you put your exits, learning again applies. Never count a trade that you didn't make. If you look at the market today and you think yesterday you wanted to be in but something stopped you, that's where learning can come in again. It's very important not to be harsh with yourself. Always be kind with yourself. Always focus on learning. You do not have a crystal ball and nobody else does. You shouldn't feel bad if you miss an opportunity, because there's another one coming up just behind it. We know opportunities reset every day, and that's another rule from the Masterclass. There are so many rules inside there, and many that will never ever be shared in public because you require too much knowledge in order to make them work. Everything is built up step by step. I'm really looking forward to your thoughts on learning. Specifically, how important do you think learning is when investing and trading? And how important do you think learning is when living? Please keep on reaching out to me through this particular form to have your charts marked up with the CTKS method. Kate and I are here for you. We want you to succeed inside the markets. You can let us know what you're actually trading through this anonymous form. The more you share, the more that we can care for you, and the more that we can help you to become more profitable. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.